From your prism of the United States, should Americans focus and be aware of what's going on in Greece?
Well, of course, we have to be aware of what's happening in Greece. I think the practical consideration for the stock market is that while economists believe a Grexit, a Greek exit, is something that could be handled, there's still this uncertainty factor where no one can be sure that there won't be a fallout on peripheral countries like Spain and Portugal. So, probably it can be handled. There's firewalls in place, but it's this uncertainty that's hanging over the market.
You went right to where I want to go because I know you're so good at the game theory back in this. I've talked to Vonnie about the massive success of Ireland in confronting this versus what we see in Greece. The real backstory here is a knock-on effect to Spain, Portugal, Lithuania, and indeed Ireland as well, right?
That's right. And that's where, the ECB and EU have set up firewalls. It's hard to be sure that those are going to work.
Maury, people talk about Greece having been in default several times in the past. What's different this time?
Well, what's different this time is that they have been given extensions in the past, and in the past they haven't been able to live up to the agreement. So I think what's different this time is running out of patience on the part of the creditors.
Yeah, and this is lack of trust. You can come to an agreement. The worry is that there's not an agreement they can hold on to. And this is what we were just hearing from our Hans Nichols in Brussels, which is that revenue is less trustworthy than cuts in spending. Is that the way you look at it as well?
That's right. Also, in terms of growth, there has to be a lot of concern that if you just load up on taxes right now, that's going to be harmful to businesses who are supposed to do the employing to get this thing moving again.